Hi, welcome back to another episode of the Chasing That Money Show. And of course, I'm your host, Leon Wilson. I've started a series on investing, and today I wanted to talk about options trading or being a day trader. This is something that I've dabbled in for many years. I still invest in stocks and I go long. These are long-term investments that I've had for many years. Plus, I have a 401k plan, and this is what can be considered as a retirement plan. But day trading, options trading, this is when you make trades, multiple trades in a day. You may buy and sell not only the same day, but in the same few minutes. This is where you're on your computer and you're tracking a specific stock minute by minute. This is crucial. You can make some big gains, but I must tell you that the majority of people lose. You heard me right. The majority of people lose. And when you first get in it, you're going to lose. That's just the nature of the game. But the more you learn how to read candlesticks and patterns, the better off you'll be. But there's one very specific thing that I wanted to let you know about day trading. And that is to be an effective day trader, trading options. You need to have an account which is a margin account. And you need to have a minimum of $25,000. Now, I know a lot of people talk about being a trader, being a day trader, options trader, and making all this money. But with mostly all the firms, you have to have this margin account, because when you buy stocks, the stocks don't always settle in one day. So that means that you don't actually own it the same day, even though it looks to be closed and it's part of your stock portfolio. Well, if you are going to be an options trader with a margin account, that margin account must be funded with a minimum of $25,000. If you're going to make trades of 4 or more trades per week, then you're going to have this margin account. So it's something to think about. If you're going to do a cash account, first of all, you can't be a day trader with a cash account, because you are limited on how fast you can turn around those options. So you have to know this. You have to be aware of this, that you're not going to just work with cash. And I did a short a while ago where I talked about margins. I believe margins come from the pit of hell, because I have lost my shirt in margins. And I primarily only work with cash. Occasionally, I will dabble in margins, but actually I try to stay with cash. And up until this point, it's done pretty good for me. I've lost, but when I lost, I can walk away and not owe anything else. With margins, you can be out of pocket for a long time. So that's something to be aware of. But remember this: day trading, options trading, being effective, using it as a living, or what's called pattern trading, being able to do that for a living. It requires a margin account with a minimum of $25,000. But you have to be careful, because it will bite you. It will bite you bad. I'm speaking from experience. But research, study as much as you can. Options trading is another form of income. It can be passive income to go hand in hand with all your other side hustles. You can make a living off of it, but you have to be meticulous insofar as, number one, your education, learning all about options trading, learning about the various patterns, learning about being able to read those candlesticks and all those different settings, and also charts. Charts are key, patterns, again, these are all key. So learn as much as you can. And then when you first get ready to go into options trading, do paper trading. That means you can do like pretend trading. Most firms have a place that you can go and just pretend to trade. And you're able to follow it, see if you win, see if you lose, how much you invested in. You can do all those things. I would suggest you do that for a couple of months until you really get good at it. And then go ahead with a small number, maybe buy one contract. Remember, one contract equals 100 shares of stock. Also, when you're looking at the stock in options, you may see a contract and it may say it costs $3.85. Well, that's not actually what that is. It's $3.85 times 100. So it's, you got it right. It's $385. 385, whatever the number is, you multiply that against 100. And that's how much that particular contract will cost you. Okay? Well, until next time, you be safe and pay attention. If you want to get in the stock market, it can be a good thing, especially now during the recession. The market is going up and down. If you're able to jump in and jump out, it's possible to make some gains, but you can lose a lot as well. So you have to be wary. Remember, as my disclaimer, this is for entertainment purposes only. I'm not a financial advisor or a CPA. I'm none of that. I can only give you my experiences, my wins and losses that I've had personally. And then you take it for what it's worth. Be blessed.